Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a quick look here at Bitcoin, see what's going on. Again, one more update, kind of seeing where we're at. We had some pretty nasty candle wicks and candlesticks lately, so we're going to take a look at that and much more. Obviously, focus on some high block capital data and make sure we know exactly what's going on. In fact, we can go ahead and start with this because I think this is a good foundational point here. And again, be sure to stick through to the end because there's a lot of good stuff here. We're going to take a look at Bitcoin dominance and a few other things that are pretty important to note. But when it comes to this actual high block capital data, what we're looking at, again, if you're kind of new to the channel, we've got some fear and greed index down here, basically just telling us that the fear is at 59 or greed is at 59. It's basically just an index where the higher the number, the more likely people are to invest, essentially, right? We see pink or red, then that's a case in point where people are scared and they don't really want to invest all that much, or there's a significant drop and we can see a price like that. Okay, so it's good that the price is kind of balancing out. Another thing to recognize here is there's a little bit more shorts than longs, or basically more asks than bids. In other words, people are trying to sell their Bitcoin more so than buy it right now. Okay. Furthermore, also, open interest is coming down. Okay, now when the price goes up and then open interest comes down, that's typically a sign for reversal. Okay, so most of the time when we see that happen, we can recognize that the price action is not going to be able to sustain itself, and it should either go sideways or down from here. Okay, and the main reason why is because when open interest is high, it means more money is coming in the market. When you have low volume, that's effectively telling you that the price is coming down. Now you could argue that there's not a lot of low volume here, right? Well, this is volume across certain exchanges, whereas open interest is different, where it's like total money coming into the market. So it's obviously a lot different, but the bottom line here is that these two don't directly correlate, but the price action going up and the open interest going down, that's usually a cause for concern. We have a lot more shorts getting liquidated than longs in the most recent past, and volume minus yesterday's really weird trading day. We have the pretty much average amount of volume today. Okay. Now taking a look here at the liquidation levels. This is where things get kind of, I wouldn't say interesting, but it's just kind of stuck on sideways right now. Okay. Now, what I mean by that is the last 12 hours hasn't done a tremendous amount. We've ranged as low as 28.6 and upwards of about 29.1. Okay, so we're kind of in that little range of just 28.6 to 29.1, that $500 range. Nothing's happened too much. We got support at 28.5 and some pretty decent amount of resistance at 29.3. Okay, so just something to note. I wouldn't say it's super relevant, but it is important to know that we're kind of range bound right now, and range bound activity can be slightly boring sometimes. There's a few other coins that are taken off today. I'll cover those, but generally speaking, there's not a lot going on today. So net longs here, what we want to look at here is to see where the longs are at. So majority of the longs here recent, of course, the more recent longs that were taken a few hours ago, they're doing pretty well here because they're in at about 28.7, whereas the price is just, let's say, low 29s or 29 even. Okay, so that's good for the longs. Longs are not underwater by any stretch. The shorts, however, are pretty much break even. So there's a lot of shorts in the last 6 hours, right at the 29,000 mark, expecting the price to come down. There's also previous shorts, of course, that are in profit at 29.2. So I wouldn't say there's a significant margin between those two. They're fairly break even. So there's kind of again that little squeeze there between 28.6 and 29.1. So that $500 range will be very profound. And what's interesting about that is it's right in between these Fibonacci retracement levels. So you can kind of see right here to right here is that range. Obviously that tighter range that we're in right now is this guy right here. Okay, so we're going to see what happens here soon. Hopefully all is well. Let's go ahead and quickly look at some other things that are important here to note, because I feel like it's good to know these things. So when it comes to Bitcoin futures, just to kind of help understand, there was a gap that was filled yesterday that was created earlier in the day. Okay, so when the price shot up as it did on, what was that? Was that Monday, I think it was? Then we saw, of course, this come up and the price gapped up, right? And then yesterday it got fulfilled here to go ahead and clear that gap. Okay, so it's kind of a good thing it got taken care of, so we don't have to worry about the price pulling back again, but that was a relevant thing that we saw here recently. Another thing to note as well is our Bitcoin dominance is increasing, and once more we are starting to see altcoins, I wouldn't say suffer, they're not actually doing terribly, they're just kind of, a lot of them are drawing dead and not really moving too much, but the fact that Bitcoin dominance is increasing is a good sign. That really just kind of helps us understand that there is, again, more money flowing into Bitcoin, but less money flowing into altcoins. Okay. The reason why I believe that is because, again, open interest is down. With less open interest, then and Bitcoin price going up, it's inevitable for alts to go down. Now, again, I say go down, a lot of them are just like 1 or 2% up. They're not terrible, but there's not a money flooding into those. If we start to see Bitcoin dominance come down and get rejected off this level, then that's a case in point where we're probably going to start seeing altcoins start to flourish. Okay. Next up here, this is just kind of a quick little summary here or reminder, because this is the index. This pretty much has just the volume that we want to kind of look at. And we can recognize that there was a tremendous amount of volume yesterday, of course, with that really unique candle wick. But again, today, kind of average or normal. Okay, so nothing crazy there, but these little things here kind of tell us that this is a strong support range, or correction, resistance range, right there between 30,000 and 32,000 is a round number. Okay, so 30 to 32 will provide a strong resistance as it has in the past. Kind of see that there. All right, so let's go ahead and take a look at the good stuff here. See what's going on. Now, when we look at this here, obviously, a couple things to note. We can actually look at the larger time frames too to kind of identify a few things. Let's do that on this chart here. And let's go ahead and see here. We can see that we are converging on the MACD here on the monthly, at least soon to. Now, again, I'm being a little presumptive here, but if the price goes sideways or up for the next couple months, we will have a convergence there, and that will be pretty huge, because last time we had a convergence, it did some pretty good stuff, right? We can also see that we're trending right at 50 on the RSI. We're currently above, but this month hasn't closed yet. So again, I think this month closing at a doji or higher, we're going to be in pretty good shape to go higher from here. We don't want to close at 27,000 or lower, because obviously that would shift this here downwards and we'd get rejected. Okay, so that to me is a very positive sign in the overall sense of things. We can also see on the moving averages too, because if I recall correctly, for our simple moving averages, what was it? Were we below or above the 50? Let's see if this go ahead and get there. There we go. Yeah, so we're closing above the 50 and we're right below the 20-day. Okay, so this is good and bad in a lot of ways. More so good because being up over the 50 has notoriously been a positive bullish sign for Bitcoin, and we're no longer underneath it. That's very good. So there's a good chance we're going to close above that at this point, because that's trending right around 25,000. But that is right at that 25,300 mark if the price were to pull back that far. So we got that as a support, I guess you could say. But a tentative resistance on the 20 right at that 32,000 mark. The weekly is going to tell us something very similar. We're above all three moving averages, which of course is a very nice thing, but we are and have gotten rejected off the 70 on the RSI. And that's usually a sign in which it's just kind of, it's very standard, very normal, because it was getting too high too fast. So I'm glad that we kind of rejected off that so we can kind of calm down and have a next leg up. But again, our MACD convergence is starting to diverge a little bit, so we're losing a little bit of momentum there. But all in all, not terrible on the weekly. Okay, so let's go ahead and see, what does the daily tell us here? Well, first of all, we're above this level here, 50 on the RSI. This is pretty huge, because I mentioned previously not being above that would be a terrible thing. And if you can see here, this doji candle from yesterday did close above that 28,300 mark, and we came up higher. Okay, so that's a good confirmation telling us that we're in good shape. We can also see we're converging on the MACD here as well as a strong potential. Okay, so all in all, pretty good stuff there for the Bitcoin on the daily. What we want to look at too is support and resistance levels. We can see, of course, this Fibonacci level at 0.786, 30,100 got rejected yesterday. And then, of course, here today, we can see 29,500 getting rejected at 0.618. 0.618 is my favorite number. Honestly, if I ever got a tattoo, I would put 0.618 on there. A lot of people wouldn't understand it, but I think the right people would. But it's just a really key Fibonacci retracement level that is very, very consistent. So keep that in mind. We're definitely going to see that work as a resistance, 29.5, for the time being. Okay, so let's go ahead and take a look at, what is it? We want to look at our actual TD sequential and kind of see, we did come down to an 8, got that reset, and we're up to a 3. Hypothetically, we got another 7 days of continuation of the upside. I wouldn't put a lot of weight into that, but it is something we want to pay attention to. This is where things get kind of funny. And if you're not familiar, you didn't watch my video from yesterday in the afternoon, I had an update. This was Mt. Gox. One of the accounts became live at that point, and then the price just dropped down by like 9% in under an hour. It was pretty crazy. In fact, we covered this on our Twitter there. And what was it? If you didn't see the video, it is available here. You'll be able to see it if you kind of look for it. But generally speaking, oh yeah, friendly reminder, if you could please help us grow our Twitter community. That kind of reminds me, we're trying to get up upwards of 1,500 by the end of the month. Hopefully we can go ahead and achieve that. But if you could help us out by following, liking, all that good stuff. All right, so taking a look here though at the 4 hour, what we want to do is not just talk about yesterday's data, because obviously that's in the past, but it is relevant to note that we are having some significant bullish behavior. Price comes all the way down, ramps right back up, almost as if it didn't happen. But we are consolidating right here at that 2,900 mark. So, sorry, 29,000. So 29,000 is an important point of contention. A closure above 29,000 today I think would be pretty helpful, because then we'd get above that support level. longs would continue to hedge their longs, and the shorts, of course, would potentially get squeezed out because they probably have a resistance at that 29.5 mark. Okay. So again, a lot of cool things there in that sense, but the 4-hour time frame here is kind of telling us that there's not a lot of momentum, even though the price is continuing higher. We're starting to see that convergence slow down a little bit. So in general, I wouldn't expect the price to break out anytime soon, but in truth, it is working itself into somewhat of a wedge, so that actually could be not true at all, and we might actually see a breakout. It's an interesting, strange little pattern that we're seeing right now. Most of it's just kind of the knee-jerk reaction to that crazy sell-off from yesterday. All right, let's go and wrap this up here with the hourly and kind of see what TD sequential tells us. Not a whole lot. We don't have a true sequence of numbers like we saw here before, so no overextension, nothing significant to note. The cloud is probably going to be fairly funky, which it is. This is pretty common, especially when you have like these massive increases and decreases. The key takeaway here is that the price action is not free of clear of the lagging span. So that really just tells us that it's not ideal to take a position right now. Even though we are technically above the cloud, it's still not a great sign. Conversion lines above the baseline. There's 2 out of 3 reasons here to leave your long position open, but you should effectively have taken profits by now because it could go either way. Okay. Last thing we maybe want to take a look at would be Bollinger Bands. Not a whole heck of a lot there. We are not compressing whatsoever. Super trend, we can also see we're still on the bearish type of side. Okay, so this could be short-lived. We could very well break above that range, but there's a lot of reasons why taking a long position right now may not be viable. I would consider adding to your position for dollar cost averaging. I added to 27,500 and 28,000 yesterday. It was nice to kind of get that little wick down, that fill, and hoping for further downside, honestly, just so we can continue to fill our bags before this next leg up. Keep in mind, if the price were to continue to decrease, just say hypothetically, we would be looking at 25,300 as a next key level support, because that was a very strong resistance level in the recent past, and you can see that that was tested a few times here. Okay. So ultimately, I don't think we're in bad shape here right now. I just think at this point, we got to kind of wait for confirmation. While some of my day trades are working out pretty well, the swing trades for my community, we don't really have a full-on confirmation just yet. So be patient. We will get there. It's important not to short or long into these overextensions, because as we can see yesterday, I mean, a 10% upswing and downswing in the same trading day is just crazy. Okay, so please be careful, please protect your investments and make sure that you are trading responsibly. If you could, please, of course, help us grow our community here. Of course, like, subscribe if you haven't already, and same thing goes for our Twitter as well. We do appreciate you, of course, coming on over there and helping us out by liking, retweeting, and of course, following us. Make sure you enable alerts so you can stay abreast on everything. We have about maybe anywhere between 25 to 50 tweets per day, and they're all relevant, extremely important technical fundamental data. Okay, so be sure to check that out. Thanks again so much for joining me here. Hope you all have a great rest of the day. We will see you in the next one. You take care. Bye.